Hey everyone, Apple reported quarterly financial results after the markets closed on Thursday, August 1st, that really revealed a lot about the company. We got some really interesting information about the company's business in China, about how iPhone sales are doing, and how the services segment is thriving. I'm going to review all of those big picture highlights from the company's latest financial release, and I'm going to update my buy recommendation of Apple stock. Coming into the quarter, I had Apple stock rated as a buy, and I'm going to update that recommendation and let you know if I still think the stock is a buy following these financial results.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So one encouraging thing from Apple's latest quarterly financial statements is the return to growth on the top line. The company's sales had decreased for a couple of quarters in a row, and the company returned to growth here with the sales jumping to $85.77 billion, up from $81.79 billion in the same quarter the prior year. For the 9 months ended June 29th, Apple's sales increased to $296 billion, up from $293 billion in the same time the prior year. I was concerned that Apple's sales growth would decline again in this quarter because they didn't have any compelling product releases in the current quarter. People that are looking to upgrade their iPhones may be waiting for the latest update in terms of how artificial intelligence is going to play into the next generation iPhone. And since the company usually launches their newest iPhone around September, October, people may be waiting for that before they upgrade. Still, despite those factors, the company did report an increase in sales, which was a surprising positive for me. To make that even better is that the bulk of the sales increase came from the services segment, which increased to $24 billion from $21 billion, and Apple's services segment is significantly more profitable than the product segment. You can look for yourself. The cost of sales for products came in at $40 billion on $61 billion in sales, but the cost of sales for services came in at $6.3 billion on $24 billion in sales. So a much wider gross profit margin, roughly double that compared to products. So every dollar in sales and services is worth about $2 in sales in products in terms of gross profit. And that allowed its gross profit margin to jump to $39.7 billion, up from $36.4 billion in the same quarter the prior year. Apple has done an excellent job controlling costs, even as sales have declined in 2024. Actually, they were declining in 2024. They now return to growth with the results from the latest quarter. They've kept costs under control, and that's allowed profitability to expand here. Speaking of profitability, their operating income jumped to $25.3 billion, up from $22.998 billion in the same quarter the prior year. So imagine Apple's been able to do this while they haven't really had any compelling product launches and their iPhone sales cycle has stalled. Imagine what they'll do once that iPhone replacement cycle takes hold, right? People have been holding on to their iPhones for longer than usual. And when they decide to upgrade those older iPhones, that's going to bring in that replacement cycle that I've been talking about with personal computers, but it's also happening with smartphones. People bought smartphones in great percentages in 2020, 2021, when they were spending more time at home and when governments worldwide sent out stimulus to help consumers during lockdowns. They purchased electronics. And so those that were purchased in 2020 and 2021 are getting long in the tooth now and they need to be replaced for some people, right? Some people like to keep their phones a lot longer than others. Another thing Apple has been doing is an aggressive share buyback program, and you can see that playing a role. The diluted shares outstanding decreased to 15.3 million, down from 15.775 million in the same quarter the prior year. In the first 9 months of its fiscal year in 2024, Apple has spent a whopping $70 billion buying back its stock. Apple's management team is not like other management teams that go out and try and hype up their stock price with words. they back it up. They don't talk about how they feel their stock is undervalued. They just go out and spend $70 billion buying back their stock. Now, as an investor, you've probably heard and listened to other CEOs talk about how they feel their stock price should be so much more expensive, how their stock price has so much potential and how it's going to increase by so much over the next several years. But those same CEOs, I'll wager more often than not, are not going out and buying back shares. They're just trying to hype up their share price because they're going to benefit from that higher share price. But Apple is not like that. Apple is going out spending tens of billions of dollars, $70 billion to be precise, buying back its shares. And to me, that's the strongest signal a management team can send to tell me that they think their shares are undervalued. If you want me as an investor to think that your shares are undervalued, or to think that you think your shares are undervalued, you would be going out and buying back your shares. That tells me you think your shares are undervalued. If instead of doing that, you're just going out and trying to talk up your share price, and I'll give Elon Musk again as an example, trying to talk up the share price of Tesla stock. In the meantime, how many billions of dollars of Tesla stock has Elon Musk and Tesla sold in the last 4 or 5 years? And you compare that with something like Apple or the management team of Apple, who's very quiet about thinking the share price is overvalued or undervalued, but they're just going out and spending tens of billions and hundreds of billions of dollars buying back the stock. That tells me that the management team thinks the stock is undervalued. When you only do talking and no purchasing, that doesn't tell me that you think the shares are undervalued. So to me, that's a big difference, and I credit Apple's management team for going out and buying back their shares. And it does signal that the shares are undervalued because the company's management team, the CEO, the CFO, are the people that know the most about the company and its prospects. Nobody else knows as much as Tim Cook knows about Apple. And nobody else knows about Tesla as much as Elon Musk knows about Tesla. And I could say the same for every CEO of every publicly traded company. And so when they're going out and buying back shares of their stock, that tells me a lot about what they think about their company's future prospects. Okay, going on. Their sales in Greater China fell to 14.7 billion. That was down from 15.7 billion in the same quarter last year. But that decrease was the smallest so far year to date in their fiscal year 2024. You'll notice in the 9 months so far, sales in Greater China have decreased to 52 billion, down from 57 billion in the same time the prior year. And so this decrease of just 1 billion was the smallest out of the previous 3 quarters of decrease. I was expecting a decrease going in because I've read reports about Apple's losing market share in the Chinese smartphone segment. And so I was already expecting a decrease, but a decrease of just 1 billion or less than 10% was a lot better than I was expecting. Still, the company's prospects in Greater China are under great question because of rising competition domestically and the geopolitical concerns among China and the United States. I was also pleased with the results in the iPhone segment. iPhone sales did fall from 39.7 billion down to 39.3 billion, but some of the factors I mentioned earlier, I was already expecting a decrease, so this decrease was a lot smaller than I was expecting. One thing that surprised me was a decrease in the wearables segment where revenue fell to 8.1 billion, down from 8.284 billion in the same quarter the prior year. This is the segment that houses Apple's Watch, Apple's AirPods, and the latest Apple Vision Pro product. And despite that new product, and despite growing sales in other categories, the sales in this category decreased year over year. And it's been decreasing year over year in their several quarters. So I was surprised to see this. This was not good news for Apple stock investors. What was good news was the growth in the services segment, like I talked about earlier. Over 3 billion or just exactly 3 billion year over year growth in the services segment. That's greater than 10% growth. And since this segment is more profitable, you'd like to see more growth from this segment. So that was good to see. Apple's one of the best of generating cash flow from operations, and this quarter was no surprise. The company's cash flow from operations in the 9 months that ended June 29th increased to 91.44 billion, up from 88.9 billion in the same time the prior year. So what is Apple using all that cash for? They're buying back stock. I highlighted earlier that they're repurchasing their common stock, and that increased to 69.866 billion. I rounded up earlier to 70 billion in share buybacks Apple has done in the first 9 months of their fiscal year 2024. That's up by 13 billion from the same time last year, where they purchased $56 billion in stock. So if you combine the two periods, Apple has purchased roughly $125 billion of Apple stock. So they've repurchased roughly $125 billion in Apple stock. If that doesn't tell you that management feels the shares are undervalued, I don't know what does. Also, Apple generates significant cash flow from operations, and it's hard to find profitable reinvestment opportunities for all that cash. So one of the ways you can return capital to shareholders is through repurchases of common stock. Now you can either repurchase common stock, or you can also pay dividends or increase your dividend or pay a special dividend. If management chooses to repurchase stock instead of paying dividends or paying a special dividends, it is one indication that management could feel the shares are undervalued. And I tend to agree with management. Apple's now trading at a forward price to earnings of 29.78. I wouldn't say the stock is ridiculously cheap or very much undervalued. I would say Apple is an excellent business that's demonstrated decades of innovative capability, has a strong competitive advantage, high cost of switching for customers, all things I like to see, and is trading at a fair value, right? A little bit under fair value. And if investors buy excellent companies at fair values, I think over the long term, that will increase your wealth over time. So I like Apple at current valuations, and I'll reiterate my recommendation. I told you I already had Apple rated as a buy. I last updated that on May 28th. I'll update that again here today and reiterate that I think Apple stock is a buy. Did you know that over 90% of the people that watch my channel are not subscribed? It'll really help support my channel if you hit that subscribe button. And oh, by the way, one of the benefits of being subscribed is that I take requests from subscribers more often than I do from non-subscribers. So if you prefer that benefit, please subscribe to the channel.